In part 1, we established something important. The market does not move through phases randomly, it moves through your emotions deliberately. Accumulations engineers your disengagement, manipulation engineers your certainty, expansion engineers your urgency. But understanding that intellectually is only half the installation, because the real question, the one that separates observers from operators, is not what each phase is. It is how to recognize which phase is active while you are inside it. Not after the move completes, not in hindsight, when the chart makes the sequence obvious, but in real time, while the compression is still forming, while the manipulation candle is still building, while the transition is happening underneath price, before it becomes visible on the surface. That is what this video is about. Because knowing AMD exists does not protect you from it. Reading it in real time does. By the end of this video, you will have 4 specific behavioral clues that signal which phase is active and when conditions are transitioning. You will understand what real expansions looks like versus what manipulation displacement looks like, because they feel identical in the movement and the difference is not in the candle. It is what happens after the candle. And you will understand the operator framework for reading this campaign live, not as diagram, not as a labeling system, but as a continuous behavioral read that changes how you see every session going forward. Everything in this video builds directly from part 1. If you have not watched that, watch it first. This sequence is not optional. I am Bilal, the disciplined trader. This is episode 7 of the Operator SMC series, part 2 of the AMD framework. Part 1, build the perception. This video builds the real-time read. If you have not watched part 1, watch it first. What I am about to show you require that foundation. Let's get into it. Here is the specific problem most traders have after learning AMD. They study the model, they understand the 3 phases intellectually. They can draw the diagram, they can label accumulation, manipulation, and expansion on historical charts with complete accuracy. And then the market opens and they still get trapped in the same sequence, because hindsight recognition and real-time reading are two completely different skills. Hindsight recognition is pattern watching. You see the completed sequence and your brain connects it to the model you learned. Clean, satisfying, completely useless in a live market. Real-time reading is behavioral tracking. You observe what is changing underneath price before the phase completes, before the transition become obvious, before the emotional environment of the next phase has fully activated. And the reason most traders cannot do this even after learning AMD is that they are still waiting for confirmation. They want the accumulation to look like accumulation before they call it accumulation. They want the manipulation to confirm before they stop trusting it. They want expansion to feel safe before they act on it. But here is the institutional reality. By the time any phase looks confirmed, its purpose is already complete. Accumulation looks obvious after then the manipulation begins. Manipulation looks obvious after the expansion begins. Expansions looks obvious after institutions are already distributing into your late entries. Waiting for confirmation means perceptually arriving one phase too late. That is the problem this video solves. Here is what most traders believe about reading market phases. They believe more confirmation equals more safety. That waiting for the phase to fully develop before acting reduces risk. That patience means waiting for clarity. Operators understand something completely different. Clarity in a campaign arrives precisely when it is no longer useful. Traders believe patience means waiting for the right setup. Operators understand patience means observing evidence accumulate, not waiting for proof to arrive. Those are not the same thing. Proof arrives after the phase completes, after the trap is set, after the expansion is already mature, after the crowd has reached consensus and that consensus has become the fuel for the next move against them. Evidence arrives when the phase is forming, in the behavioral shifts underneath price, in the changing quality of continuation, in the emotional environment developing in the crowd before it reaches its peak. The operator does not wait for the market to tell them what happened. The operator reads what is changing. That single shift from waiting for confirmation to observing behavioral transition is what makes AMD a real-time tool instead of hindsight framework. Before I give you the 4 behavioral clues, I need to complete the AMD framework by covering the third phase, because expansion is where most traders make their final and most expensive mistake in the sequence. And understanding what separates real expansion from manipulation displacement changes how you read every aggressive aggressive move on your chart. The third phase is expansion, and the most dangerous thing about expansion is that it feels the safest. After accumulation created disengagement, and manipulation creates confusion. Expansion creates clarity. The direction is finally obvious. The move is finally happening. The trend is finally confirmed. And that feeling of safety, that emotional relief after the uncertainty of the previous two phases, is exactly what makes expansion the phase where retail traders make their most expensive entries. Because expansion attracts the crowd, and the crowd arrives late. Here is what real expansion actually is institutionally. Real expansion is sustained directional repricing driven by accepted imbalance and continued participation. Every word in that definition matters. Sustained, not one candle, not one spike. Persistent continuation that holds through pullbacks and continues building value in the new direction. Accepted, price is not just moving beyond a level. Price is holding beyond it. Candles are building here. Pullbacks are defending the new pricing. The market is saying this value is accepted now. Continued participation. The move is not running on the initial burst of energy. The new participation is entering on pullbacks. Continuation is being sustained by ongoing flow, not by the exhausting momentum of the breakout candle alone. Now, here is the distinction that changes everything about how you read aggressive moves. Manipulation, displacement, and real expansion often looks identical on the first candle. Both are large, both are aggressive, both have urgency, both breaks obvious levels, both feels institutional in the movement. The difference is never in the breakout candle. The difference is in what happens after it. Manipulation, displacement spike through a level and then hesitates. The flow through weakens immediately. The next candle overlaps the previous one. Price begins rotating back toward where it came from. The acceptance never arrives because the move was not designed to create new value. It was designed to create emotional commitment. Real expansion displaces and then defends. The pullback that follows holds above the breakout level. Sellers attempt to push back and fail. Continuation resumes efficiently. The market is building value in the new location, not retreating from it. That post-candle behavior is the truth detector, not the aggression of the move, the acceptance that follows it. And here is the psychological trap of late expansion that most traders never recognize until they have experienced it repeatedly. The clearer expansions becomes emotionally, the closer it may be to completion. Because expansion attracts participation, and as participation increases, the crowd that was absent during accumulation and confused during manipulation finally reaches consensus. They commit, they chase, they pile into the move that finally feels safe. And that concentrated late participation, that crowded emotional certainty, is often what institutions distribute their inventory into before the cycle resets. The move you felt safest entering was the move that needed your entry to fund the next phase. Now the framework you came for. Four behavioral clues that signal which phase is active and when the transition is occurring, not in hindsight while it is forming. Clue 1. Failed continuation. This is the first and most reliable signal of phase transition. When a phase is ending, the behavioral that defined it stops working efficiently. Sellers who were extending downside during the pre-accumulation move suddenly cannot sustain continuation. Buyers who were driving the manipulation spike suddenly cannot hold beyond the level. The dominant behavior of the current phase begins losing efficiency before the new phase announces itself. Watch for the move that should have continued and did not. That failure is the evidence that conditions are changing underneath price, not the confirmation of the new phase, the failure of the old one. Clue 2. Displacement quality change. Every phase produces a different quality of displacement. Manipulation displacement feels emotionally urgent. It bypasses analysis. It creates the sensation that thinking means missing. The candles are large but unstable. The urgency is theoretical rather than purposeful. Real expansion displacement feels intellectually committed, efficient, like the market is going somewhere with direction rather than performing movement for an audience. The urgency is purposeful rather than theoretical. The candle have follow through rather than hesitation. Learning to feel the difference between these two qualities of displacement, not just see them, is one of the deepest perceptual developments in operator training. Clue 3. Acceptance shift. This is the truth detector for every phase transition. Accumulation shows acceptance of range conditions. Repeated return to equilibrium. Failed continuation at extremes. Manipulation shows acceptance of emotional positioning. Crowd committing in the wrong direction. Expansion shows acceptance of new value. Price holding beyond the breakout level. Pullbacks defending rather than retreating. And at every transition point, asks one question: what is the market currently accepting? Not where is price moving. What is being held? What is being defended? What value is being built and sustained? Acceptance reveals the campaign objective more clearly than any candle pattern ever will. Clue 4: Emotional rotation in the crowd. This is the most advanced clue and the one most operators eventually considered the most reliable. Every phase transition produces a measurable shift in the emotional environment of retail traders. Accumulation produces boredom and disengagement. When that boredom begins converting to anticipation, compression is laddering and manipulation may be approaching. Manipulation produces urgency and certainty. When that certainty reaches consensus, when every trader watching the chart reaches the same conclusion simultaneously, the manipulation has achieved its objective and transition to real direction may be imminent. Expansion produces relief and FOMO. When that relief converts to overconfidence, when late participation floods in and the move finally feels undeniable, expansions may be approaching exhaustion. Your own emotional state during each phase is not a distraction from reading the market. It is data about where the campaign is. The operator who can observe their own emotional activation with detachment without suppressing it, without acting on it impulsively, but simply reading it as information and access to a real-time signal that no indicator can replicate. Let me show you all 4 clues working together in one sequence. Price has been compressing for hours. The chart looks dead, retail attention has drifted. But underneath the surface, downside continuation keeps failing. Each bearish push loses efficiency before extending. The compression is not empty, it is controlled. That is clue 1 active. Failed continuation signaling accumulation may be present. Then the emotional environment shift. Compression tightens further. Anticipation build, the obvious resistance level above becomes a focal point. Every trader watching this chart is now waiting for the same thing. The breakout candle appears large, aggressive, closing above resistance with displacement. That feels institutional. Volume spikes, social certainty reaches consensus. This is clue 4. The emotional rotation from anticipation to enmity. That consensus is the signal manipulation has achieved its objective. Now watch for clue 3 acceptance. The candle that follows the breakout hesitates. Price cannot hold above the level. A second candle forms overlapping the first. The follow through that real expansion would show. The defended pullback, the building of value above the breakout, never arrives. Price begins rotating back below the level it just broke. The move spiked, it did not accept. Then clue 2. Displacement quality change. A bearish candle forms with a completely different character. Not theoretical, not emotional, efficient, committed. The candle has follow through. The next candle continues lower without hesitation. The pullback that forms holds below the breakout level, below what retail just used as their entry confirmation. The trapped buyers exist, they stops fuel, they move lower. The emotional certainty that built during manipulation converts instantly to confusion and panic, and the real expansion, quite efficient, accepted, delivers price towards its objective. 4 clues, 1 sequence. Every transition visible in the behavior, not in the labels, not after the move completed, while it was forming. Most traders spend their entire trading career waiting for confirmation, waiting for accumulation to look like accumulation, waiting for manipulation to confirm before they stop trusting it, waiting for expansion to feel safe before they act on it. And every time they get the confirmation they were waiting for, the phase is already over. The accumulation that looked confirmed was already transitioning to manipulation. The manipulation that finally looked like a real breakout was already collecting the last of the liquidity it needed. The expansion that finally felt safe was already feeding on the entries of everyone who waited too long to be certain. Confirmation is not safety. Confirmation is the market telling you at the exact moment your capital is most useful to the campaign, that everything looks exactly the way it needs to look. The operator does not wait for confirmation. The operator reads what is changing. The shift from pattern trader to operator happens at a specific moment in your development, not when you memorize the AMD diagram, not when you can label the faces on a historical chart. It happens the first time you sit through a compression, feeling the boredom, noticing the failed continuation underneath it, and instead of watching charts, you stay and observe. It happens the first time a breakout candle appears and instead of certainty you feel a question forming. It is being accepted or just spiked, and it happens the first time expansion begins and you are already positioned. Not because you participated it, not because you predicted it, but because you read the behavioral clues while everyone else was waiting for confirmation. That transition does not come from watching videos. It comes from changing the question you ask. Every time you open a chart, not what pattern is this, what behavior is changing, and what does that change mean for where the campaign is heading. 3 mistakes that prevent this from being installed. Mistake 1. Applying the 4 clues as a checklist. The 4 behavioral clues are thought as a framework. Most traders receive them as a list, and list produce mechanical application, waiting for each clue to appear in sequence before proceeding to the next, as though the market follows a lumbered process. It does not. The clues accumulate as a continuous behavioral read, overlapping partial, sometimes arriving out of sequence. Failed continuation begins before acceptance shifts becomes visible. Emotional rotation in the crowd precedes displacement quality change. The operator reads the weight of accumulation evidence, not the completion of a checklist. Trying to confirm each clue independently before acting means waiting for the phase to complete, which returns you to same problem this video was trying to solve. Mistake 2. Overcorrecting on emotional state. This video teaches that your emotional state during each phase is data about where the campaign is. Most traders receive that correctly. Then some of them flip it into a trading system. They feel certain, so they conclude this must be manipulation. So they fade the move. They feel bored, so they conclude accumulation is active, so they position immediately inside the compression. They use their emotional observation as entry triggers rather than as contextual information. Your emotional state is one input, it is not the signal. The clue is that certainty in the crowd tends to accompany manipulation. That does not mean every certain feeling moment is a fade. It means certainty is a flag that demands deeper observation, not an automatic trade in the opposite direction. Observation first, decision second, always. Mistake 3. Entering expansion too late and calling it the safe entry. After learning AMD, most traders attempt to solve their manipulation trap problem by waiting for expansion before entering. This is progress. Then they enter late into expansion after the direction is obvious, after participation has flooded in, after the crowd has finally reached consensus. The concept teaches this directly. Expansion attracts the crowd. The crowd arrives late. The clarity that makes expansion feel safe is the same clarity that makes it dangerous, because that emotional relief, that certainty finally arriving after the uncertainty of accumulation and manipulation, is often what institutions distribute their inventory into before the cycle resets. AMD does not move the entry to expansion, it moves the read to accumulation, so the entry can be placed before. The manipulation engineers the certainty that traps everyone else. Here is the practice that install this framework. For the next 5 sessions, do not trade, only observe. Open your chart at the beginning of each session. Track only 4 things. What continuation is failing? Which side keeps attempting to extend and losing efficiency? That is your accumulation signal. When emotional urgency spikes, when a move creates the sensation, that thinking means missing. When consensus forms suddenly, that is your manipulation signal. Whether the aggressive move is being accepted or just spiked, whether the pullback holds or retreats, whether the market is building value in the new location or returning to where it came from, that is your expansion read and your own emotional state throughout. When you feel bored, when you feel certain, when you feel the urge to chase, each of those states is telling you something about where the campaign is. 5 session, no trade, only behavioral tracking, because the read comes before the trade, always. AMD is not a pattern, it is a campaign. And campaigns do not announce their faces, they reveal them through behavior, through acceptance, through the emotional environment they engineer in the crowd. The trader who waits for confirmation will always arrive one phase too late. The operator who reads what is changing arrives before the phase completes. If this is the work you are doing, stay on this channel.